Today on the Roxom Report London, Bitcoin dips and then rises after reports of a ceasefire between Israel and Iran. We'll take a look at how the markets are moving right now. We're following up on yesterday's story about a new Bitcoin reserve in Texas. A new bill is being introduced in the US to try to stop Trump's crypto money grab. Tesla is up and running on their Robotaxis. We have a video of somebody taking one of the rides. And the UK is taking aim at Google to promote competition. All that and much more today on the Roxom Report. Okay. Good afternoon and welcome to the Roxom Report. We are coming to you live from the heart of London to give you our takes on the latest and greatest Bitcoin news. Thank you for joining us today on this beautiful, rainy London afternoon. It feels much more like home now that the sun is gone. Okay, so without further ado, sorry. I'm just trying to figure out what to do here because apparently we have a little bit of static. We're actually going to cut to a quick break to sort the static out and we'll be back with the Bitcoin story making waves today. Okay, we'll be right back.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Welcome back, everyone. Thank you for your patience there. So let's get started with the biggest Bitcoin story making waves today. This is Top of the Block.
Okay.
Bitcoin has surged past $106,000 this morning, following reports of a possible ceasefire between Iran and Israel. Late last night, US President Trump announced on his social media platform Truth Social that the two countries had agreed to what he called a complete and total ceasefire, expected to begin within 6 hours. This comes after a rollercoaster few days in the crypto markets. Just yesterday, Bitcoin dropped to around $98,500, but following Trump's announcement, it jumped nearly 3%, briefly topping $106,000. It's since pulled back slightly and is now trading near $105,300. Other cryptocurrencies also saw strong gains. Ethereum, XRP, and Solana each rose between 8 and 10%. The news had also moved other markets. US stock index futures climbed about 0.5%, and oil prices have dropped sharply. Crude oil is now trading around $65 a barrel, down from $75 earlier in the day. There was some initial confusion about whether a ceasefire had actually been agreed, but shortly after Trump's post, Reuters reported that a senior Iranian official confirmed Tehran has accepted the proposal. Markets are clearly responding with optimism this morning, but the situation is still developing. We'll keep you updated as more details come in. Okay, we're going to take a quick commercial break, and we'll be right back with the Global Gist.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Welcome back, everyone. We're actually going to take a look at how the markets are moving in our Market Watch segment. First up, let's take a look at the European markets. So over the last 24 hours, European stocks have surged, significantly driven by renewed investor optimism following the announcement of a ceasefire between Iran and Israel. So the Stoxx European Index is up 1.25%. The FTSE 100 is up almost 0.40%. Germany's DAX Performance Index is up 1.76%. And France's CAC 40 is up 1.23%. So all moving in a positive direction. So the ceasefire announcement by US President Donald Trump, confirmed by Israel's Prime Minister, significantly boosted risk appetite across global markets. Now, this easing of Middle East tensions helped alleviate concerns over geopolitical risks that had pressured markets in recent weeks. Sector performance was mixed but notable. The travel and leisure sector led the gains with a strong surge of around 3.6% to 4.3%, reflecting expectations of improved consumer confidence and travel activity as geopolitical risks recede. Conversely, the oil and gas sector declined by about 3.5% as oil prices fell to their lowest levels in 2 weeks amid reduced fears of supply disruptions. Gold prices also dropped to near 2-week lows, reflecting diminished safe haven demands. Now, let's take a look at the US stocks. Over the last 24 hours, US stock markets posted solid gains despite ongoing political tensions in the Middle East. The Dow Jones Industrial Average surged as well as the S&P 500 and the Nasdaq Composite, all showing increases there. Yeah, all of them looking up. Investors appeared to largely overlook Iran's retaliatory missile strike on a US military base in Qatar, as the attack was successfully intercepted with no casualties reported. This helped ease fears of a broader conflict and supported risk appetite. Okay, so investor sentiment remains cautious due to unresolved US fiscal policy issues, including President Trump's efforts to push a sweeping tax cut bill through Congress, which faces resistance from key lawmakers. Trade negotiations also remain stalled, adding a bit to market uncertainty. Earnings reports influenced individual stocks, with Lowe's shares rising about 2.5% in pre-market trading after beating profit expectations and reaffirming guidance, while Target gained almost 2% despite missing estimates. Mega-cap tech stocks were mixed, with Apple, Microsoft, Nvidia, Amazon, and Meta trading lower, while Alphabet and Tesla remained near flat. In summary, the US stock market showed resilience over the past 24 hours, buoyed by easing geopolitical fears and falling oil prices, though futures indicate some caution ahead amid fiscal and trade policy uncertainties. Next up, let's take a look what's happening in the Bitcoin arena. Bitcoin could be on its way to a new high of $120,000. Well, before I get into that, right now, we're looking at 105,279. I actually don't have the 24-hour highs and lows here, so we'll talk about some projections. But yes, on its way to $120,000. That's the view from several analysts who say that 4 key factors are lining up to support a potential bull run. First, let's look at price behavior. Despite recent geopolitical tensions like the US airstrike on Iran and the Iran-Israel conflict, Bitcoin has mostly held steady above $100,000. That kind of resilience is boosting investor confidence. Short dips were quickly brought up, showing a strong buy in the dip mentality. Data also shows that while some investors are selling at a loss, others are jumping in looking for long-term gains. Second, central bank policy is shifting. 2 Federal Reserve officials, previously known for favoring high interest rates, now say they support a rate cut in July. Rate cuts make borrowing cheaper and often boost investments in stocks and crypto. Analysts say this change could signal growing political pressure, with some calling it a MAGA takeover of the Fed. Third, oil prices are unexpectedly falling. After fears that military strikes would push oil higher, prices actually dropped sharply on Monday. That's good news for inflation and supports the idea that central banks may feel more confident easing rates soon. And finally, the technical startup looks strong. Bitcoin's key moving averages are forming what traders call a bullish momentum pattern. These indicators suggest the price trend is heading upward, similar to patterns seen before big rallies in the past. With strong investor behavior, supportive policy shifts, easing inflation fears, and solid technical signals, momentum for Bitcoin's next move higher is building. Okay, I'm going to cut to our producer Anton up above there to get his hot take on this news. We've been hearing over the last, I would say, 10 days to almost 2 weeks about this bull run to 120,000. What are your thoughts of if and when this might happen?
I'd say it's looking more possible every day, especially with this, huge geopolitical situation happening right now. And we saw the price of Bitcoin crash a bit, but investors were buying the dip at about 99,000. I mean, if that's the new dip to buy at, it's a good sign that we're not crashing to the lows we've experienced in the past. Now, Bitcoin is super volatile. Anything could happen to it. But if that's the dip that's getting more investors to buy in, I think the case for 120K is looking pretty good.
I would have to agree with you there. Yeah, I mean, throughout, I don't know that there's been a time where there's been this much ongoing support for Bitcoin. So when it has dipped, it's taken a little while to recover, but it seems like everything is in its favor right now to sort of shoot up.
Yeah, and it'll be interesting to see if it dips below 100K again and remains below 100K. 100K is sort of it's more of an emotional number than actually meaning anything, but it would be interesting to see what happens if it goes to 5 digits for a sustained period of time, and whether this sort of bullish sentiment remains through that. But yeah, I mean, in terms of the situation globally, seems like things could possibly be calming, which is a good thing for markets all around.
Indeed, we're definitely seeing that. Well, thank you for your take there, Anton from above. We're going to take another quick commercial break, and then I promise we'll be back with the global gist.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Welcome back. It's time for the Global Gist, your daily breakdown of the headlines driving the world of finance, tech, and digital assets. We cut through the noise to bring you what matters fast. So here's what's making news today. First up, in Washington, a new bill targeting cryptocurrency involvement by US public officials is making headlines, and it's aimed squarely at President Donald Trump. California Senator Adam Schiff, along with 9 other Democratic lawmakers, have introduced the COIN Act, short for Curbing Officials' Income and Non-Disclosure. The proposed legislation seeks to stop presidents and other elected officials from financially benefiting from digital assets during their time in office, and even for a period after. If passed, the law would ban public officials from promoting, issuing, or endorsing cryptocurrencies, including meme coins, NFTs, and stablecoins. That ban would take effect 180 days before they take office and extend for 2 years after they leave. The bill follows increasing scrutiny of Trump's crypto ties. According to financial disclosures, Trump earned $57.4 million through a crypto platform called World Liberty Financial, or WLF for short, a company backed by members of his family. The president's digital asset holdings are estimated to be worth $2.9 billion, making up around 40% of his total wealth. Earlier this year, WLF launched its own stablecoin called USD1. A type of crypto that's pegged to have value of the US dollar. In March, an Abu Dhabi firm announced plans to use that stablecoin to settle a $2 billion investment in Binance, one of the world's largest crypto exchanges. That move raised even more concern about the influence of international players and the mixing of political and financial power. Trump's family have since reduced its stake in WLF from 75% to 40%, but the proceeds from that sale are expected to be in the millions. In a statement, Senator Schiff said Trump's dealings raised serious ethical, legal, and constitutional concerns, and accused him of using the presidency to enrich himself and his family. The bill, he added, is meant to protect against the financial exploitation of public office. Over in the House, Representative Maxine Waters introduced a parallel bill called the Trump in Crypto Act, after Trump hosted a dinner celebrating top investors in his own meme coin. Now, both bills face an uphill battle. Democrats are currently in the minority, and even if they pass both chambers, Trump could veto them, requiring a 2/3 vote to override. As for the crypto market, Some analysts say increased regulation could cool speculation in politically linked tokens, but Bitcoin itself, decentralized and not connected to any individual, may remain largely ineffective. Long term, it could even benefit from efforts to clean up the space and improve transparency. Okay, going to our producer Anton. It seems to me like this doesn't have much chance of passing, this bill passing, just because Democrats don't have the majority there, and Trump's certainly not going to sign it if he doesn't have to. But it is important. And what do you make of these futile attempts, basically, to curb Trump and his exploitation of public office, and then it just kind of falling on deaf ears? It just feels a bit futile at this point.
It does. There's a few things that are surprising to me here. The first is, well, I mean, just the blatant, open monetization of the presidency is insane. But there are rules against this, and why those rules aren't being protected or fought for, I don't understand. So the fact that they're proposing these bills is I think a good thing, but there are rules in place. There's legal actions to take here from a president monetizing, even if it's in a cryptocurrency. I don't understand why there needs to be an extra bill for this. Good that they're getting more specific, but it does feel like just another fight for something that shouldn't need to be fought. It should be blatantly against the law already. I mean, if he was creating just sort of a money-making scheme in any other way that gave you access to the White House and allowed Middle Eastern countries to use your platform and for you to benefit from them moving money around the world, that would be blatantly illegal. I don't understand why this isn't already.
Yeah, are you able to look that up? Like, because I mean, it's a very valid point. Why does a new bill need to be passed to stop the president in abusing his position to enrich himself? Why does a new bill need to be passed? Why can't he be stopped? And I would assume it's because of the Republican control of both branches.
Yeah, I would assume so. Looking it up right now.
Yeah.
Let's see.
But I do think that this bill, like the other one, I think there was one a week ago that they tried to pass. I think the Maxine Waters one actually didn't make it anywhere.
Oh, did that one die very quickly?
Yeah, or there was one of the articles that we were talking about, or maybe it was to go into an existing bill, sort of stronger language about this type of stuff not being allowed, and then that got left. But yeah, so far there's not been any success.
The workaround might be the fact that I'm not sure if this is the case, but possibly that his sons are in charge of all the crypto assets that they're selling, not him personally, which was sort of the workaround that they had during his first presidency. I'm not sure if that's the case because a lot of these articles are just noting potential corruption or outright blatant corruption, but they're not saying how this is legal.
I don't know if you had read or heard about they briefly touch on the dinner with Trump for his early adopters of his meme coin that was held a few weeks ago, and it was somebody on Twitter or TikTok or something posting about being at that dinner. Really bad food. Trump, they thought that it was supposed to be an evening with Trump where they got to meet him and talk to him and ask him questions. I think he briefly showed up on stage. Like, it was a big letdown that a lot of these people had paid. Texas is going a step further, allocating $10 million to buy Bitcoin outright. That's a small slice of the overall state budget, just 0.004%. But experts say the move sends a big message. According to Lee Bratcher, president of the Texas Blockchain Council, the investment signals to the world that Texas is ready to lead in the digital finance space. This comes just months after the Trump administration announced a national crypto reserve. However, that federal effort is designed to be budget neutral, meaning it relies on things like seized crypto assets or issuing crypto bonds, not taxpayer dollars. Texas isn't stopping with the Bitcoin buy. Governor Abbott also signed a companion bill, House Bill 4488. That law protects the Bitcoin reserve from being swept into the state's general revenue, which can happen with other unused funds. In other words, the reserve is protected and designed to grow over time. This legislation marks a notable shift in how digital assets are treated. Instead of being seen as high risk or speculative, Bitcoin is being approached more like gold, a long-term store of value that governments might want to hold on to. So what does this mean for the market? While $10 million won't move Bitcoin's price on its own, the symbolism matters. It could increase investor confidence and encourage more states or even more countries to follow suit. And in the long run, that kind of momentum could help drive Bitcoin's value even higher. Anton, producer in the cloud, what do you make of this? They're moving quickly on this bill and getting it funded and protecting it. It seems like this is really happening.
Yeah, they moved very quickly. The bill was passed yesterday, and they're getting ready. They're $10 million for the reserve today. They're not putting too much into it. This just feels like a good
dipping their toe
play. Yeah, dip your toes in. They're one of the first to do it. Or they're one of the first to pass the bill. I think they are. Is that right? The first to actually fund it. Yeah. Mm-hmm. So it feels like a smart, easy play.
Yeah.
Why not?
Yeah. If 10 million was only 4/100ths or whatever that tiny fraction of their state budget is.
Yeah, 4%, right?
I think it was even less. It's a small, very small amount.
Wow.
I don't know what it's incredible what it actually must be. Let's see, where is it?
Oh, wow.
Yeah, it's a tiny percent.
0.00004%. Wow.
Yeah, it's 10. So, they have a massive state budget. So it really isn't a risky play here.
No.
And I wonder how much they'll add as time goes by.
Yeah, and what other states this opens the doors to. I mean, Texas, I think, is the second biggest economy in the United States after California, I believe. So who knows what could be next? California doing
Is it over in New York?
I'm not sure.
Biggest economies. I'm just curious.
Yeah, what do we got?
California, Texas, and New York. Yeah, Texas is the second.
Okay. Yeah, so we need to get California and New York on the board here with some Bitcoin.
Yeah, come on, put 10 million in. Can't hurt. All right, we're going to take a quick commercial break, and we'll be back with more Global Gist news.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Welcome back to our Global Gist segment with the latest Bitcoin and tech stories from around the world. Next up, Tesla has officially launched a limited version of its long-promised Robotaxi service. This service began this weekend, but only in one neighborhood in Austin, Texas, and only for a select group of Tesla fans. Each ride included a Tesla employee sitting in the front passenger seat for safety. This modest rollout is far from the sweeping robotaxi service Tesla CEO Elon Musk promised years ago. Since 2019, Musk had talked about a ride-share hailing service that would transform transportation and let Tesla owners earn money by renting out their cars. Last fall, Musk showed off a prototype called the Cybercab, designed to operate without a steering wheel or pedals. He said this service would significantly boost Tesla's revenue. But Sunday's launch was limited. The rides used existing Tesla Model Y cars, not the Cybercab, which is not yet allowed on public roads or mass-produced. It also wasn't the most advanced robotaxi service in Austin. That title goes to a joint effort between Uber and Waymo, Alphabet's self-driving car unit, which has been operating there since March. Still, Tesla pushed ahead. Rides were available to a small, invited group. According to tech analyst Dan Ives and reporter Joey Klender, the rides went smoothly, even on tricky roads with obstacles and parked cars. The cars successfully navigated narrow streets and oncoming traffic. However, there were some hiccups. Videos showed the Robotaxi driving on the wrong side of the road after a failed turn. And in another case, the car missed its stop and kept going despite passenger prompts. No accidents were reported. We have one of those videos. Can we pull that up and check out one of the videos? Let's see. Which one was this?
All right, pulling it up right now. It's looping, so we might have to wait for it. But oh yeah, I think we're right on it. So here's the car driving here. I think it gets confused. Oh no. We'll wait for it to loop. Oh, there it goes. There, it's going real wacky.
Oh, that's weird. Is it on?
Then it kind of rights itself and gets into the left turning lane. But
Oof.
yeah, it's a scary moment there.
I love that when they talk about this, it was a soft launch for a few people driving around Austin, Texas, and they say no injuries were reported, as if that's like a big deal. Yeah, surely you shouldn't even be doing this if it's a win to have no injuries when like 5 cars are driving around.
Yeah. Yeah, maybe it's too early.
Perhaps.
Maybe it's too early, but I don't know. The Waymos we've been driving around for a long time now. People don't seem to like them. They destroyed a couple of them during the protests.
Oh, that's right. That's right. Yeah, have you been in one?
I have not. Have you?
I haven't actually. No. I don't know. I don't know that it was very weird actually. I saw one in Los Angeles. And it was just kids in a Waymo with no adults and just kids in a car. And I didn't like it.
Like literal children?
Children, just children on their own in the car.
Weird.
Yeah. Obviously, they're being driven somewhere, but I don't like it. I mean, I feel like it's, back in the day when elevators used to have somebody in them to like open and close the elevator door. They had the elevator operators, and then when they got rid of them, it was an adjustment for people to get used to getting into elevators. And it's like, now I'll get in one fine. I don't need an elevator guy or gal to press the button for me. And so I wonder whether these self-driving, it's the same type of thing with the self-driving cars. I think as we move into this time, everything is becoming more technology backed, and with the AI and hacking and the advancements of all of that stuff, I just feel like we're definitely playing with fire. Like, it's fantastic. It's great to have this technology, and yes, but anything and everything can be hacked. These things get confused and drive people off bridges. And I don't know that the self-driving cars have done that yet, but I think it's only a matter of time. Google Maps sends people down dangerous roads and dangerous things. Accidents have happened. I don't like the idea of the Cybertrucks where you can't even press the pedals or grab the steering wheel. That seems you're really just putting your fate in Elon Musk's hands there, which makes me a bit nervous.
I mean, it seems to be that's where we're going, and I know we're getting there, but the transition period does seem scary.
It does. I don't think I'm an early adopter in the sense I like my things to be heavily tested out on other people. You know how they say that there's always the early adopters, the first ones to get the new whatever tech gadget. I'm definitely not that. I think I'm more of a give it to the masses when they're ready.
I also think there's a difference between like getting the newest iPhone and jumping in a driverless car that drives for you. Like there's a very different danger level between early adopters in both of those markets.
That's true, yeah. A car that doesn't know how to take a left turn safely. Yeah. Well, sort of back to this. So all rides cost $4.20, a number that Musk often uses. Musk shared positive feedback from riders on social media, emphasizing plans to expand the service quickly. But Tesla faces stiff competition. Waymo has been provided paid robotaxi rides since 2020, serving hundreds of thousands of weekly riders in several cities and planning further expansion. Meanwhile, General Motors recently ended its robotaxi service after a serious accident and cited tough competition and resource challenges. Tesla's robotaxi rollout may be small for now, but it marks a new chapter in the race for self-driving ride services. Interestingly, I didn't know that General Motors had dabbled in this self-driving robotaxi space. We were looking into, we've got the article there. So yeah, there was actually an accident that happened in 2023, I think. Does it say there?
I think so.
Where one of the cars hit a pedestrian and dragged her 20 feet down the road, I think. And she was 20 feet down the road, 6 meters, leaving her seriously injured. Google may soon have to make changes to its search services in the United Kingdom to promote greater competition. This comes after the UK's Competition and Markets Authority, or CMA, launched an investigation into the tech giant. Google currently dominates the UK search market, accounting for more than 90% of all online searches. Around 200,000 businesses in the UK use Google's search advertising to connect with customers. The CMA is concerned that this dominance may limit competition and choice. Under a new UK law, the CMA can require companies with too much market power to make changes. While the watchdog is not currently accusing Google of anti-corruptive behavior, it has proposed a roadmap of possible changes. Oh, this thing really makes me annoyed. These include giving users a choice screen to select different search providers and offering more transparency and control to publishers whose content appears in search results. The CMA says the average person in the UK conducts between 5 and 10 searches daily. Businesses spend roughly £33,000 a year on Google ads. The watchdog suggests that if competition improved, these costs might come down. Sarah Cardle, the CMA's chief executive, said the investigation found room to make the search market more open, competitive, and innovative. She added that the proposed changes would give UK consumers and businesses more control over how they use Google's search services. Google responded by saying the CMA's suggestions were broad and unfocused, but the company pledged to work constructively with the regulator. Google also warned that the proposed changes could have significant effects on UK businesses and consumers. This investigation began in January and follows increased scrutiny of Google's search practices worldwide. Last August, a US judge ruled Google had an illegal search monopoly. The European has also fined Google billions of euros for favoring its own shopping service in search results. The CMA plans to make a final decision on this matter by October. Okay. Anton, what do you make of this story here?
It seems a little late to me.
What do you mean?
I mean the anti-monopoly fight was happening in the U.S. against these tech companies for the last 5 years or so, and it feels like this is just being brought up now in the U.K. when Google was sort of at its height. Pre-ChatGPT, Google is sort of learning where it stands right now in the world of AI, when you can, more and more people are using ChatGPT for their searches rather than Google right now. Mm-hmm. I mean, Google SEO is kind of changing completely and trying to adapt to it, but we're seeing the AI companies take a big percentage of their market share. So, yes, there's still a search monopoly. They've made sure that they are, but I feel like the competition is sort of naturally coming now. We needed this 5 or 10 years ago.
Yeah, definitely fallen behind the times. Yeah, I would agree. I can't imagine that they do dominate. Well, here's the thing with AI, even with ChatGPT, Google kind of operates in a different way. And I guess it's that market, businesses promoting and advertising. They're saying that they kind of have the monopoly on that as opposed to just search results. Because I don't know how many people use ChatGPT or, other tools like that to specifically find businesses. It's more asking questions. But yeah, I do think they are losing some of their search, definitely, to ChatGPT. But yeah, you're right. Definitely a behind the times move by the UK economy and the UK government. I mean, I think it's also to have to say, we want these prices to come. They're kind of telling Google that they want to set the price. We want to have more competition so that you make less money. It just feels very, it's very anti-capitalist, I suppose. Which kind of, I hear that and I'm like, well, why should Google? I mean, Here's the thing with the other lawsuits, when they're actively making it harder and shutting out competitors, then definitely they should be held accountable. But if they are you'd call it Googling, they won that race of, search. And if they are reaping the rewards of being the ones that kind of got to the top there, why should they then give other people a leg up? But, they shouldn't be actively trying to stifle competition. So, yeah, I feel like it's a bit unfair, actually.
I think we need to. I keep wanting to ask Jeeves a few questions. I think we need some of that.
Is Jeeves still there? Is he still around?
I think ask.com is still a thing.
Okay.
We need some Ask Jeeves. We need some Alta Vista.
Yeah, AOL searches.
An AOL search.
Yes,
a Yahoo
take
search.
it back. I know. When was the last time you did a Yahoo search?
Let's take it back.
Yeah, go back to the 90s. Yeah.
I did like when Bing was trying to
Bing?
make that a verb. I mean, they're still around.
Yeah.
Some search engines still default to it.
Yeah.
Not search engines. Some browsers still default to it. But yeah, it never became a thing.
Yeah.
It was not good.
Bing.
I don't know. Maybe it's gotten better now.
Yeah.
But yeah, nobody's telling you to Bing something.
Yeah. Give it a Bing. Yeah, it doesn't quite have the same ring, unfortunately. All right, let's. Should we move forward? We've only got a few minutes left, but let's get to our to check out our Buck the System story before we wrap up here. Welcome back. Okay, we're going to share our Buck the System story where we're looking at disruption, innovation, and the fight against centralized control. This is not just about Bitcoin. It's about the powerful stories that embody decentralization, transparency, and freedom. All right, our Buck the System story today is a major family a major family office in Hong Kong is stepping into crypto investing for the first time, signaling how far digital assets have come in gaining institutional acceptance. VMS Group, which manages nearly $4 billion for some of the city's wealthiest families, has announced plans to allocate up to $10 million to a crypto hedge fund called RE7 Capital. The final amount is still being decided. VMS has traditionally focused on private equity, investments in private companies that aren't listed on the stock market. But as those deals have become harder to exit, the firm is looking for more flexible, liquid investments. That's where crypto comes in. Rather than buying Bitcoin directly, VMS is investing through RE7, which uses a market-neutral strategy. That means it avoids betting on whether prices go up or down. Instead, RE7 earns yield by lending out stablecoins, digital assets tied to the value of traditional cryptocurrencies, and by helping provide liquidity on decentralized exchanges. The fund also uses hedging techniques to manage risk. VMS says its decision was driven by growing demand and clearer government support for crypto in several parts of the world. Strong institutional interest, including Donald Trump's recent pro-crypto policies, is adding momentum. Bitcoin has climbed about 50% since Trump's election win in November, and earlier this month, stablecoin issuer Circle launched a major initial public offering, boosting confidence across the sector. VMS isn't stopping with hedge funds. It also explores ways to integrate crypto payments into real-world projects, including a property development in Vietnam. There's a generational shift, too. According to VMS, younger members of wealthy families are increasingly pushing for exposure into digital assets, but they want to do it through regulated professional channels. For now, the move marks a new chapter for one of Asia's most prominent wealth managers. All right, that wraps up the Roxom report from London. Now we're heading over to our RoxomTV team in the US for an in-depth look at events and consciousness. Coming up next is The Great Awakening with Nolan. Join us again tomorrow for the latest on Bitcoin and financial news. Thanks for tuning in.